still within this big trading range. Like this is selling climax, automatic rally, secondary test, phase A. So B, test in B, test in B. So we still need to wait for phase C, right? So from this chart alone, it does look like, well, we probably need to look for some more bars here to develop until we see like phase C. However, if we just focus on the characteristics of the price, like for example, this looks like a weak hand rally to me, and a second point of the excitement. So this is the first, so the second, and that should be confirmed by the sign of weakness. So if we get a sign of weakness here, likely that could be the upthrust of the distribution phase C. So UTED instead of the upthrust. So that could happen as well, because not necessary that it should play by the textbook schematic. So really, for the bearish case, we want to see a sign of weakness develop from here. So it means that I expect a breakdown of this trading range. So if this is a redistribution, so I put a question mark here, so you can see that like here. So if this is a redistribution, well, we have a distribution here, sign of weakness. So if this is a redistribution, then I want to see a sign of weakness, break below here, or at least like this, break, or at least tested this area, and then followed by a weak rally, so something like this, and then tank again. So this will means that could be the final capitulation or the final flush of the index of the market. Okay, so that means that should be UTED. So this is phase C. So another scenario could be we just need to wait for S&P 500 to spend more time within this big trading range, because it's probably not a time yet, and I still believe that it could be like phase B. This is A, testing B, testing B, and we might need to see a phase C, something like this, tested, and then probably it's going down. Then that could be the UTED, or maybe not the UTED, the LBSY, last point of the supply. So before it just break down. So two scenarios for the bearish side could be developed. So I think it's very important to look at how the price actually react right at this support area. Okay, because right now at this moment, just purely based on this index, there's still possibility to develop into a accumulation structure. However, we just need to wait until the later stage to see. So first is definitely you need to bounce back up from this support area, and second, it just need to commit above this access line 4280 or 4300. So you need to commit above, and then followed by another rally, and eventually for the bullish case, in order to violate this bearish case, and definitely you need to bounce back, commit above this access line, access level 4300, and then eventually 44, 45. So this are the level, so resistance level, and 45 is here again, and eventually I need to see it commit above 46. So something like this, bounce back up, and going up, break all the resistance, commit above, and then show a test as a backup action, something like this. Then that could become a accumulation, right? So right now is definitely geared towards a redistribution structure. So whether this is the start of the breakdown, like keep continue, and then break down, and then backing up, and then going down, then that is really the worst case. And second bearish case is just to spend more time here, choppy, and then we could just go down. So if we really see the S&P 500 break below here, 42, 41 breakdown, inability to rally, then go down, mark down again. I have the calculation, the point and figure chart. is somewhere around 3650. So that actually in line with my first calculation from the original distribution area. So that is sort of like a confirming count. But either way, even if it's not a confirming count, it still means that there is enough causes built within this redistribution. So there is definitely enough causes for S&P 500 to reach 3650. All right. So if we go back to this slides here, okay, so that is the S&P 500 point figure target that I prepared earlier on. So you can see that I use a H4 time frame with a box size of 50, taking into account this segment here, and that works out to be somewhere around 3600. So the 3600 actually in line with the previous accumulation range or the backup area. So that is the previous accumulation range. There is a breaking out, backing up. So that is actually the backup area. So in terms of the vertical chart for the candlestick chart, is just like another support area, 3600, 3650. So that is really like the worst case that I prepared for the redistribution structure. So you can definitely see here there's a 3650 somewhere around here, and we got a reaccumulation structure breaking out here, backing up. So somewhere around here. So that probably makes some sense. There's a previous support area, and when it come back down, and I think that should provide some kind of the support. And if that really happens, means that the breakdown, the markdown, then everyone will scream like bear market. In fact, we are already in a bear market, but unless you want to look at just purely the percentage, the drop of the percentage in an index, then probably it's still not yet happened, because from the top to right now is probably around 12%. So technically, maybe for the index, it's not yet in the bear market territory, but for a lot of the stocks, it's already in a bear market. So there's no doubt for that. So I don't really want to argue with that. But this is really a stealthy bear market, because a lot of the stocks, especially the growth stocks, the tech stocks, already seen like dropping of the 50% to maybe stretching to around 80%. So that definitely convinced me that this is a bear market since November last year. But the index is still holding up. However, if you look at the individual stocks right now, like look at some of the quality stocks like the blue chip, big cap, mega cap, like Google, probably Apple, Tesla. So if that breakdown happen, then definitely those kind of the stocks will also see breakdown as well. We see the sell-off will happen together as well. So that is actually what I consider as probably the final flush. So if that happened, then we could really see that break below, and then going all the way back down. Then that should be the final panic moment, or the final flush. And during that period, I think for the market breadth wise, we could definitely see that break below 30%, and probably going back into like the COVID sell off, or even the 2018, 2019. So those kind of the level around 15, 10%, super oversold level. So when that really happens, pretty much that will be safe. That will be a lot safer, because the worst is likely there already. And as long as you keep the cash, we have the cash, then you can probably just go out to shop, to start buying. So, but right now, I think is probably the start of another downswing, down leg, testing the support area. So definitely there will be some kind of the bounce. So we need to judge the quality of the bounce. So if the rally is very weak, then likely we could probably speculate this as a sign of weakness. So a sign of weakness means that it's about ready to break below, and then to enter into the markdown phase means it will just collapse. Okay, so that's why in a Malaysian stock I just put alert, because on Thursday despite the sell-off in the markets, in the US market, I didn't really see panic in the Malaysian market. So even like the commodity stocks like press metal, MSC, they drop, but it's not that much. So in terms of structure, they're still pretty much bullish. But certainly, if we continue to see the weakness ahead in the S&P 500, for example, going test the support area or even tend to break down, then there will be a lot of panic in Malaysia market as well. So it's just a matter of time that they will drop, and they will drop hard. So that's why I put an alert, and definitely now is not the time to be aggressive and just jump into buy, because of the US market is just super bearish. However, there could be another scenario that's like with the Malaysian stocks is just be kind of resilient and kind of still not yet affected. That could be maybe a few days until the big boys, the fund managers aware and alert like, wow, this is we need to sell. Then you will see the effect. All right, so right now, definitely is in a down leg, right? Down leg. And if we break below this area, so break below, say 4100, then we could expect S&P 500 to go a lot lower. And the targets that I have is around 3650. So somewhere around here. So they'll be oversold. So we still have around 14% to go if counted from Friday closing price. So another 14%. So for the really the markdown phase, and then we could see probably another bounce up. Then it could develop another trading range, whether it's a redistribution or accumulation. Then we need to judge from there as well. Okay. So right now, definitely is very bearish, and especially the main thing that I concerned about is the losing of the leadership, because right now I don't really see any leading sector, not the energy, not the commodity, not the healthcare, not the consumer staple, not the utility, because those three defensive sector, the utility, the healthcare, the consumer sector, they all reverse and break down, have a change of character bar, just like the energy on Thursday and Friday. So that's not good at all. So that if that really happens, and if the bear market really is just so contagious and it started to spread into the defensive sector, like the consumer, the healthcare, utility, then certainly no sectors, no industry group will be spared, and they will all experience sell off. So, but for those, the leading sectors like the energy and the other three, they are probably experienced as a eventually like a change of character, because they are probably still in a very strong uptrend, and then suddenly we see change of character like this, and then if they experience a sell-off, they could be entering into trading range. So in terms of the structure, they might still be outperforming, but in terms of the absolute performance, they will go down definitely for sure. So the main thing that I'm concerned is definitely we are losing the leadership. So especially when we see the energy commodities are dropping.